My name is Ivan Dragonov. I'm with Dealroom, a startup database and intelligence company. And in the next 10-15 minutes, I'm going to talk about some of the global SaaS venture capital trends that we've seen on the market and what are the key takeaways. The SaaS ecosystem is now valued at 7.5 trillion, which is a 7x increase since 2016. And if we compare that to a decade earlier, when the ecosystem was valued at just over 300 billion, is more than 20x increase. And at the same time, we've seen that younger cohorts of companies have been scaling faster. And today, the largest cohort is the one of companies that were launched between 2010 and 2014, and the second largest being the one that's even younger from 2015 to 2021. However, you can see that there was a small dip since last year when the ecosystem reached a peak, and this chart doesn't tell the full story of how both public and private markets performed. So let's have a closer look into that. We see that public SaaS companies have lost around 68% of their value since the peak in last November. Up until then, the emerging cloud index, which tracks the largest public SaaS companies, has outperformed major indices like S&P 500 and Nasdaq. However, back in November, it was a turning point for the emerging cloud index, and since then it has really underperformed. And we see that there is actually a dispersion in how some of the largest SaaS companies have performed this year. So year to date, we see that CloudStrike lost around 11% of its share price, but there are many SaaS companies that have lost more than half of their share price since the beginning of this year. For example, Shopify and Snowflake. And this performance on the public markets is actually having implications also in the private markets, in IPOs, fundraising, new unicorns, and let me talk a little bit more about that. After a record year in 2021 with 131 IPOs, the number of SaaS IPOs this year is an all-time low. Just 19 IPOs so far. 14 of which happened in the first quarter, and just five happened in the second quarter. And whether the number would recover and it would reach a level that has happened before, like in 2019 or 2020, it's still unclear. And the upward trend of public market offerings that has been since 2010 is very likely to reverse. In the first quarter of this year, venture capital investment in SaaS reached 53 billion, which is technically a 13% increase year over year. However, we see that the second quarter with just 39 billion, although it's not over, we see that there has been a downward trend since the end of last year, when in the second quarter the VC investment reached 62 billion. And there has been a noticeable pullback in many rounds. So this chart is looking at the share of capital by round size, and we see that the share of $100 million rounds and more has actually decreased by around 15% since the third quarter of last year. Back then, the share of capital of mega rounds was accounting for around 65%, 66%, and in this quarter, it's at 51%. In 2022, VC investments in SaaS in the US collapsed. In Europe, it's still down, but a little bit higher than what it was in 2020. Still, US-based SaaS companies attracted 46 billion of capital, and this is still more than what Europe and Asia attracted combined. And last year, US reached an all-time high of 130 billion, and just for last year, that's more than what European SaaS companies have raised for the last 10 years. Both in Europe and United States, the median round sizes have increased across all stages, but the biggest increase is actually happening at later stages. So on this chart, we are looking at the median round size, and we use the self-labeled rounds. And in this case, you see that seed rounds, both in US and Europe, increased almost 100%. But where it becomes really interesting is actually at Series B, Series C, and Series D plus stages. We see that this year, the median round size in Europe is actually overtaking the one in the US, and it has grown faster in the period 2016 2022. And it's also interesting to see that there is a small pullback in the median round size at Series D plus stage in the USA, but we haven't seen that yet in Europe. And there is usually a little bit of a lag between what's happening in the US and Europe, so we might as well see. And also for Series B, we see that in the USA it's kind of dipping. Similarly for Series A, so maybe the same would happen in Europe as well. Today, there are 903 SaaS unicorns globally, and more than half of that comes from US. So in the US, there are 580 unicorns, which is a couple of times more than Europe and Asia combined. Europe and Asia are more or less moving in the same direction. Europe has 129 unicorns, and Asia has 127. And the number of unicorns is highly related to the amount of investment. So as US-based companies have been attracting much more investments, it's not really surprising to see that the US is also leading by a large margin when it comes to the number of unicorns. And we've seen globally that unicorns are being created at a larger pace. So back in 2010, there was one unicorn created every quarter. A couple of years later, it's several unicorns every month. And last year, almost one unicorn was created every day. And this is due to the fact that there are building blocks like AWS, machine learning, the rise of APIs, but also the fact that SaaS companies have access to global distribution that enable them to grow much faster over time. And this is likely to continue as the APIs become more sophisticated, and the way SaaS offerings can be integrated becomes better over time. And although there is a little bit of the pace has been a little bit slowing this year, still 105 unicorns were created so far, which is more than how many unicorns were created back in 2020. Companies are spending more on digital transformation. Enterprise software spending is growing the fastest at 27% between 2020 and 2022. Still, however, in terms of aggregate amount, IT services and communication are much bigger segments. But what is true for all of those categories is that they're growing and expected to grow over time, which would mean that the total addressable market for SaaS companies would grow over time. And as more mature companies want to become resilient and remain competitive, they would invest in cloud services that would enable them to run their operations more efficiently. The USA is spending way more on IT compared to other countries, while the second largest economy in the world, China, is spending less than 1% of GDP. So the USA spends around 4% of its GDP on IT services. Europe, you can see somewhere in the middle, but significantly less, with United Kingdom being close, but Germany, France spending half of what the US spends. So in this sense, two things. First, it's not surprising that US-based SaaS companies have been raising more capital. It's just because their market, addressable market, is larger, and they can generate revenues from those companies that are spending on their services. But at the same time, once China unlocks its spending on IT services, this would mean that the addressable market for SaaS companies would grow tremendously, and it means that it's now is the time to build basically a SaaS offering and start addressing some of the issues that mature companies have, which relate to automation, management of resources, supply chain management, and whatnot. We see that still SaaS penetration remains at low single digits in key categories like supply chain management, operations, manufacturing, and engineering. Collaboration, the collaboration category is on top with 81% penetration, but engineering comes last with just 5%. And given that the entire tech ecosystem is becoming more distributed, and the workforce is becoming more distributed, I think human capital management, collaboration would remain really important categories for companies to spend money into. But at the same time, given the fact that at the moment there are so many supply chain issues, and many companies on the entire supply chain are still running their operations with spreadsheets, I think it's inevitable that they switch to SaaS offerings that help them to automate the process, make sure that they can manage resources in a more efficient way. And as the SaaS penetration grows, so would be the total addressable market and the universe of SaaS companies. And I think at the same time, as investors realize that, they would deploy more capital. And we've seen actually that record amounts of capital are ready to be deployed by SaaS investors. So in this chart, I've put how much new funds were raised by investors who have some experience investing in SaaS companies. This quarter so far, more than $5 billion have been fundraised, and last quarter that amount was at 11 billion, which you can see is the largest value since 2012. And all of this capital remains to be deployed and invest in solutions that help enterprises become more resilient. So just a couple of takeaways. First, there is some turbulence right now on the public markets, and it's impacting fundraising in the private markets. But there are very solid fundamentals that would enable actually SaaS companies to grow and to build and building basically a resilient SaaS company is it probably now is the best time to build a SaaS company. So thank you very much for having me, and in case you have any questions, please go ahead and ask. And while we are waiting, in case you want to receive the slides, feel free to contact me on LinkedIn, and I'll happily share it.
Ivan, thank you so much for your insightful presentation. A lot of great data points for people to be aware about. Actually, I wanted to use the opportunity and ask you a couple of questions. You've spoken a little bit about the penetration of various, SaaS verticals, but I was wondering, if you can maybe share your views, what you're thinking about the sectors and other sectors in general with Dealroom. What trends are you seeing? What sectors are exciting for investing or for founding companies?
So what other sectors are exciting? To be honest, the last couple of times whenever I do presentations, it seems like all the sectors are ripe for disruption. So in the last couple of months and year, we've done we've done research on marketplaces, and we see that online marketplaces are gaining penetration, and offline dollars are moving online. So that's a great sector to invest in. At the same time, there is a lot of automation happening in the industrial complex. SaaS companies play a role there, but there are many other solutions in logistics that play a role there. So if you're building a company in industrial tech, that's also a great time. I think in general, we are at the point where we have developed so much underlying technology, like low code tools, APIs, and at the same time, we have access to the cloud and access to 80% of the population globally online. So now is the time to really build any type of solution, and because there are many building blocks that would help a founder to really scale and hit the ground running in a way that was not possible 10 years ago, when just a fraction of the population was online, and many of the decision makers in key companies were people who are not aware of what the technology can offer. Well, nowadays, a lot of decision makers are people who are used to having a convenience of ordering a food and receiving it in 30 minutes, or finding where to go to their next trip with a couple of clicks. And those people demand the same type of solutions when they conduct their business job. So now is really a great time to build any type of startup.
Yes, that we're also excited about that, Ivan. And I know that you haven't mentioned anything about crypto. It has been like a noise of the day for many years, and we know that there are a lot
Yeah.
of investors who are like focused on crypto and the next
Mhm.
sort of generational things there. What do you guys make of that? Obviously, it has come down quite a bit, but
Yeah. Well, I'm not the probably the biggest expert in our team. One of my teammates is covering crypto way more than I do. But what we've seen is that there was an initial hype in crypto, and there was a lot of investments into the space, into projects that were not as viable. But I think now is coming the second generation of projects which are more focused on the underlying technology, on the underlying blockchain, that I think are really promising. And actually A16Z, they raised two funds recently, a couple of billion each, to invest in crypto. And if they're raising such large amounts of capital to back crypto projects, there must be something promising in the underlying technology, which is beyond the hype of following Bitcoin or any other coin.
yes, well, hopefully. One thing, maybe last question for me. One thing you were talking about is like Europe versus US in terms of valuations and round sizes. How do you guys see? Because historically Europe has been sort of lagging behind, and considering the macro crisis, and we hear economists saying that Europe is going to be probably more impacted by the current downturn in energy prices, and obviously there is a Russian invasion into Ukraine that is happening in Europe as well. How do you see like Europe in the next 12 to 18 months? Is it a good, because founders, they need to make plans. Okay, I'm starting a company, where do I need to be based? Where do I hire people? Where I'm going to be fundraising?
Yeah.
Which cities I need to be, building relationships with? So does it all mean that people need to be going basically after US more than Europe, or Europe is still great for fundraising? What are your
Yeah.
thoughts?
Yeah. So a couple of things. So a couple of years ago, US was definitely the leader when it comes to tech and fundraising. But we've seen over time that the gap between the US and Europe has been closing. And also, back in the day, New Palo Alto and the Silicon Valley was definitely the leader when it comes to breeding unicorns and fundraising. But we've seen that also in the US, the ecosystem has been becoming more distributed, and there are other areas like New York, Boston, that have been gaining ground at the same time. Simultaneously, here in Europe, we've seen that the number of cities where a unicorn is born has increased from I think 14 to 50 plus in the last couple of years. So what I'm trying to say is that the ecosystem has been becoming more distributed, and building a great tech company is now possible from any point in the world, basically, because you can reach all these customers in a seamless way. And also investors became aware of that, and even during the pandemic they were backing a lot of companies online, and they were conducting a lot of the meetings online. So there's in my opinion, if one is building the right product and solving the right problem, they have access to both customers, but it can also reach out to investors and even conduct a couple of the meetings online at the beginning and be able to raise capital. And one of the other points that we are one of the other key takeaways we found out internally, and we've published in some of the reports, is that the next unicorn can come from anywhere in the world. So both investors should be looking everywhere, and they should think about the world becoming more distributed. But also founders should not be biased by certain locations that are like the biggest tech hubs at the moment.
Okay, Ivan, thank you so much for your time and joining us today.
Thanks,
was
Alex.
a great discussion, lots of numbers. So hopefully it's helpful for our audience. And have a good day. Hope to see you.
Stay in touch.
Absolutely.